Yo, what's good? What's happening? What's popping? This your boys got like 3 sevens, you know the vibes. Especially coming at you guys with another video. You know what it is. This time it's gonna be the blueprint series. You know what I'm saying? Playlist or whatever you want to call it. It's just a group of videos made and specified to help you and pave you through the blueprint. You know what I'm saying? So yeah, I call this the blueprint series because I'll basically be starting out from like basic, like what you need to become profitable. So yeah, just a quick overview. I'll be starting with a demo account, a 5K demo, just to replicate real live trading markets and the account size that I'll be doing my challenges with, my funded challenges with, because the first account that I will look to acquire will be the cheapest one, which is my forex funds is 5K, yeah, $5,000 account, which is around 40 or $50, $50. So yeah, which is around a rack. So yeah, I'll buy one each and every month. Yeah, basically buy one a month up until I pass it and trade it up until I get my first payout. And then from then on, we start building. Now for now, it's the road to consistency and profitability. It's not even like the road to 5K funding yet or what. Nah, it's just the road to consistency and profitability. If I can reach consistent profits on this, oh yeah, 5K. Let me show you the guys the account. So yeah, here's the 5K account right over here. As you guys can see, 1 is to 100 is the leverage, which is usually the one we'll use for the prop firms. So yeah, it's a demo. Xness is my preferred broker of choice. The link will be in the description, and the link for this particular my FX book will also be within the link, but it's also here at the top if you actually want to take it down. So yeah, this is my account review. I'll take you through the trades in a couple minutes. Let me just take you through the trade I took so I can briefly tell you exactly what was happening on the account and how I managed the lot sizes and everything. We'll get to that. But basically, first I want us to start off the fact that on the weekly we had this weekly supply zone right here, and we did see price go into the zone, tap it, and then drop from last week, and then this week was going to be the second bearish week, well, presumably second bearish week, if we do close bearish Friday midnight. But yeah, so I did see the higher time frame bearish pressure from the weekly. You feel me? Yeah. So I did go down to the 4 hour. So now we saw the higher time frame pressure on the weekly. Let's go down to the 4 hour. Let's use the Nasdaq. I think this one's a bit better for me because the other one I use that other Nasdaq for like placing trades and shit and doing like deep analysis. These are the player on Nasdaqs. So I have multiples. So guys, as you can see, price was coming rounding off from that weekly level. So there was weekly, so there was bearish order flow volume. There's bearish pressure on a higher time frame. So the higher time frame bias for Nasdaq is bearish currently at that current moment. I took the trade at around 1. So I had placed my fibs from this point here to this point here, and we had found that price did retrace around the 62% level at most, but basically it stayed within the 50%. So if you drop down to an hourly time frame, we drop down to an hourly time frame, we do see that it actually was an area of supply within this particular retracement area right here. So this area of supply was created basically. The reason I'm marking out the specific area is because we do see there's this move up and then there's this consolidation within this area because there's a flipping range in price. As you can see, price stayed in this time period for in this specific range of price between these two levels for a specific time period, for an extended time period, and then price did actually break at this point around Wednesday last week, NY Open, we got our opening leg to break these previous lows and to break out of the retracement or consolidation. Actually, the consolidation, which was a reversal. So yeah, so it's order flow stacking and then price reverses to the other side, breaking previous lows, confirming that there's a break of structure. So basically, a change of trend, a change of sentiment into bullish, from bullish into bearish because of the higher time frame premise or bias, whatever. So yeah, then we got this level right here. The reason why we marked that level is because that's the last up move before we actually got the down move, the strong down move to the bottom. You feel me? And then price did come back up. So we understood that basically price coming back up to this point right here was going to be a 62% retracement or 50% retracement. So we were good. We were good. A good OTE, optimal trade entry, is for price to retrace around the 79 or 70.50, and then have like a sell zone right here, supply zone. Then that's OTE, optimal trade entry. You're good because it's retracing at premium levels that you can sell off above the 50% at discount levels. Sorry, what the fuck, at discount levels. So these are the premium levels. This is where price is more expensive. So if price is in a downtrend from this point from A to B, then any level below the 50%, if you were to sell off there, you're selling at a premium at a very high price, and then if you're selling above the 50%, then you're selling at discounted areas. That's basically, I like to break down ICT concepts very like simply. I do trade ICT concepts very, and I do study them like religiously, but like I like to break them down and like OTE, discount, premium, break up, block, all that shit. I cut it out, and then focus on stuff that works. And if like I need a concept but it's too complicated, I simplify it. So yeah, that's basically it. So we were looking to sell at this point right here. Previously, when price was just down here, I looked when price was just here actually on Thursday, Friday. I looked for a trade, but then I think I deposited my money in Vault Markets, and then Vault Markets was closed. So I was like, fuck it, on that Friday, so I couldn't trade. But I was looking for a sell, so price did come sell and then sell in the deep Asian session of Friday. Or no, here's Friday. So I tried to sell Thursday and then Friday consolidated and then Monday is an Asia session. It opened up bearish. You feel me? This bearish move to the downside right here is where I caught the trade, because now we're understanding that we're selling off a weekly zone in the higher time frame. We're retracing lower time frame, 1 hour order block. Everything's stacking up properly, but we're looking for an entry, right? So I had, at the point that I was looking to enter, I do believe price was at least around here. I'll show you guys. So yeah, I do believe price was at least around here. Right, so I did take my fib again. I used the fib. I don't religiously use the fib. Maybe you might look at this video and think, no, he's like a Fibonacci based trader. No, it's not really the case. In this case, I just use the fib a lot because we were like creating impulse correction, a good like we were moving very structurally. So I found no reason not to use the fib as just an indicator for overbought, oversold areas, or just areas of interest where I could potentially place a trade. So the reason why I had inputted this fib from this point and this point is because I saw this bearish move to the downside, moving off the 1 hour order block or 4 hour order block, whatever you want to call it. But I think it's a 1 hour order block. Moving from that 1 hour order block, so we do see price has been mitigated. We got the first tap, we got the second tap. So we had doubted that we'd get a third tap immediately. So we weren't looking for price to come up exactly here to 70.5 or 79. That's basically it. I was just looking for price to retrace at one of these levels and I'd find a sell. And I'd hopefully would find a sell, which I did. Not hopefully, but I'd find a level at which if price reacts, you see how I started watching price react at this level, then I was like, there must be a level or something that's making price do that. Yeah, well, so yeah, basically it. And then I did see this order block right here at exactly that 50% level. This is a basing zone, so there's order blocks at edges. Like this is an order block at an edge. This is a very good order block to take because it's like an edge. It's like at an edge of a move. So it's like what can I say? It was created at the edge, at when the price started trending. So it's an order block here. Sell entry here is good because the reaction, you know you're gonna get a reaction no matter what. Whether, sorry about them, whether, I think I must sneeze. Hold up. I hope y'all didn't hear that. I put it on mute. Okay, cool. So if price comes up here and price had previously broken structure from this order block and price comes up here to this particular order block, 50 minute or whatever, you're gonna get a reaction. You feel me? Because of where the order block is situated. It's at an edge, and then there's order blocks here in the middle of moves. These are called basing zones. They're not as strong, but they are valid. They are valid as points of retracement, and you know what I'm saying. So that's basically what happened. So I did see price come to this level. I did see a reaction around 12. I was watching the markets. I woken up around 10, 11. Now I actually woken up around 2, 3 a.m. But I was like watching Python, trying to learn how to code in the meanwhile. But around 6, 7, I started opening up the charts and I started trading. So yeah, I started trading around 10, 11. And then 12, 1-ish, I started seeing this form. And then price did drop, and I was looking to sell at this point right here. But then let me take you guys through what happened. So as you guys can see, so let me just open up the actual cell here on my side so you guys can see it. I hope it's not too rough with everything on there. Yeah, it's still there. So as you guys can see, the first three trades, the odd CAD, the US Tech M sell, and the US Tech M sell. Both of these were me just trying to figure out exactly how price moves. That's basically it. Sorry, that's basically it. I was trying to not how price moves, but the lot sizes, because a point 10 here is not the same as a point 10 in my forex fund, because a point 10 here is 0.01 on my forex funds. So because I use a point 10 on my forex funds for each and every trade, I had to use a one lot here because it's the same as a point 10 on my forex funds. You know what I'm saying? So I started using point 10. I realized no, it's too little risk. I used a 10 lot. I realized it's too much risk. Then I used a one lot. Then I realized, okay, that's adequate. So I broke it down into two trades. I took my first TP. So I had entered around here somewhere. So as you guys can see, I was trying to enter the trade before. So it took a lot. There was a lot of slippage, and basically, there was a lot of slippage. That's why I entered so flipping late. But yeah, I was supposed to enter the trade after this move right here. I think it slipped a couple pips, and then yeah, like 20 pips or 10 pips or so. But yeah, basically that's when I entered. I tried around one. There's my journal. I have a trading journal on my end. I will put the link. I got it from Black Gold Trades. What am I looking for? I'm looking for. I got the trading journal from Black Gold Trades, bruh, on her YouTube channel. She's fire. She's fire. Like she's an insane trader, bro. And she put the journal in her description, and it's her journal that she uses, and it's fire. The template is insane, so it's like there's nothing for me to complain about. So I use the journal. So yeah, guys. So basically, this was the cell, the entry, the entry. I was looking for an original cell above at this point, but as you guys can see, it was clean. It came up to that 50% clean, dropped clean. I had entered at this point right here. And yeah, basically I entered that trade pretty late, but it doesn't really matter. And then I took partials at 60 pips, which is my original target. because I was risking 20 pips for 60 pips because I was risking 0.5% for 1.5%, but I didn't really risk zero point 0.5 because I think I was risking 20 pips, but I was supposed to be risking 25 pips, which is zero point 0.5 of the account. So I was risking a little bit less, way less. Let's say 0.45 or zero point 0.4. So basically that's it. And for I took at least 80% of the trade at 60 pips, which gave me 40 pounds, which is almost 0.95 or something percent. And I took the rest at 100 pips, which is 1 is to 5 risk to reward for around 20 pounds. So that all in all equated to about 60 pounds in profit. In total, I had taken losses of around, yeah, one, two, three. So it's had a loss of around 30 pounds. So that's why my profits, that's why the account is sitting on 5,032 instead of 60 something. I did actually get one 1.3 R on the trade, I think. Yeah, 1.3 R. Yeah, 1.2 ish R. 1.2 ish, 1.3 ish R. Because it gained 0.64 and I had lost about the same amount. So I had lost about the same amount just on these weird ass trades. So I had lost $30 or so. So I did make around 1.3 ish, 1.2 ish. Yeah, but I last time I calculated was 1.3% of the account, risking about zero point 0.4 or something, which is good, which are very good. This is a good trade, classic trade. Let me take you through my emotions and everything. It was a nice trade, as you can see, 1.3% made. And here's the trading journal. Let me read you guys what I put on the journal. Great Nasdaq sell, classic ABC fib, retracement level, supply zone engulfing. I took 80% at 60. I took 20% at 100 due to lots. Yeah, 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 yeah. Personally, I felt like the trade was too easy. It was too process, bro. Like I just saw price. I just saw price at this point. It matched up to my rules, my discipline, everything. And then I entered, and then I was out, and everything was clear. You know what I'm saying? It was nah. It was a nah trade right now on Nasdaq. It was beautiful, honestly. So basically, that's what we'll be doing for now. For the next month or so, I'll be trading this account. The goal is to make around five. No, what's the target for my forex funds? I think it's 6% or 8%. Yeah, my goal is around to is make basically around 8% or 10% because that's what I need to pass my forex funds or FTMO. FTMO is 10%. My forex funds is 8%. Yeah, I remember it's 8%. So yeah, so basically, that's it. Like I'm trying to make around 8 to 10% of the accounts in a month, which I think is very possible. I will bump up my risk once I'm up at least 2% because I'm now risking 0.5%. I'll bump up my risk once I'm up 2% of the account. So once I'm up like $100, then I'll start risking a percent, and so forth, so forth. I'll be recording everything, the emotions, the ups, the downs. Yeah, and hopefully I'll see you guys in the next video when I do make the next video because I am working during the week. If I'm talking fast, sorry. Trading view has like a 20-minute time limit. I'm wasting time. So yeah, I'll be releasing videos weekly, hopefully, but I'll be taking down. I'll be as disciplined as possible, taking down trades. Following my plans. If I'm not following my plans, I'll write down my journal. I'll journal it. And you know what I'm saying. So that's basically it, guys. This is just a video for me to upload. That's the first video for the blueprint series. And yeah, guys, peace, love, happiness. Bye.